Good evening. In this video class, I'm going to take into account corporate accounting topic, that is accounts of banking companies. First of all, you must know what is a bank. Okay, then we can go further. Different people, they have given different definitions for bank. Some people, they have given that it is nothing but a financial institution which collects money and gives money to the public. In that way, some people they defined. And some people they have defined that it is an organization who takes money and lets them to different people for their different purposes. Actually, a bank is what a bank does. So what does a bank do? We'll call that thing as a bank. Okay. And when we go for this, we have to understand about the functions of banks. What are the functions of banks? Banks, they'll perform two functions. Okay, primary functions and secondary functions. So what are primary functions? Primary functions are two types. They'll collect money in the form of deposits and lends money to the needy people. These are the two functions that we come across when we go for primary functions. Now coming to secondary functions. The banks, they will act as an agent on behalf of their customers. Okay, that is agency services. They provide agency services. And the second one is general utility services. Okay, without taking into account whether he is a bank customer or an outsider, like that, they won't take into account anything. They'll do the general utility services, general usage services they'll do. And when you go for a bank, so what is a bank? Really, what is a bank? Bank is nothing but an organization which gives services to the public or to the people. Okay, so it is not a trading company. It is not a manufacturing company. So it is not completely a service-oriented company or service-oriented organization. So when you go for banks, when they are doing the functions, we can able to know about this. Now, why a bank is considered as a company? Okay, you are telling that it is a service organization, but why you are telling about a company? You see, in the beginning, all the banks, okay, they were formulated by an act known as Banking Companies Regulation Act of 1949. Banking Companies Regulation Act of 1949. Through that act, they came into existence. We'll have so many banks. We'll have Reserve Bank, commercial banks, private banks, joint sector banks, okay, scheduled banks, unscheduled banks, like that. So many types of banks are there, but whatever it may be, they'll do the same services. They'll do the same services, that is primary services and secondary services. These are the two things. Okay, and the act, it defined the bank, okay, as that defines banking, not a bank, banking. The accepting for the purpose of lending or investment. The accepting for the purpose of lending or investment of deposits of money from the public. Okay, from the public, they will collect the money in the form of deposits, and that money, whatever they receive, they will give for lending purpose or for investment purpose. Repayable on demand. When the depositors, when they demand, they have to repay and they will repay that. Demand or otherwise, or otherwise in any other, and withdrawable by check, draft, order, or otherwise. Okay, withdrawable, you can take the money, okay, either by check or by demand draft or otherwise. In any way, you can take the check from the, in any way, you can take your money from the bank. This is nothing but the process of banking according to 1949 Act. Now, we have to take into account. So, okay, you have told about bank and a banking's okay process. Fine. Now, whether they will maintain books or not. Yes, banks also they will maintain some books. The main books are the cash book and the general ledger. These two things only they will maintain. These are the main books that a bank will maintain. Now, apart from main books, what are the other books that they maintain? The banks, they will maintain some subsidiary books also. So subsidiary books, what are the subsidiary books? Receiving cashier's counter cash book, paying cashier's counter cash book, current accounts ledger. Okay, current accounts ledger. After that, saving bank accounts ledger, fixed deposits accounts ledger, investment ledger, loan ledger, bills discounted and purchased ledger. Next, customers acceptances, endorsements, and guarantee books. These are the subsidiary books that a bank will maintain apart from main books. Not only the main books, not only the subsidiary books, banks also they will maintain some registers. So what are the registers that they maintain? Bills for collection register, demand draft register, share security register, jewelry register, safe custody register. These are the various registers that the banks they will maintain. Compulsory they have to maintain. Whether it may be a small size bank or a big size bank, whatever it may be, there is no differentiation in maintenance of the books. Compulsory they have to maintain the main books, subsidiary books. Along with these two things, they have to maintain the registers also, they have to maintain. Okay, fine. So what is the system that the banks they will follow? When you go for the banks, they will follow the slip system. Slip system. For depositing, you have to take into account deposit form. It is nothing but a slip. For withdrawal of cash, then you have to take withdrawal form. That thing also a slip. So taking into account the slips, okay, they will take the money or they will lend the money or they will give the money. And for loans, whatever it may be, and for other things also, they will go for slip system only. They will take into account whatever it may be the documents that are required. They'll take all the documents and through a slip, they will give that we are going to give you this much loan. We are going to, you have invested in our bank and this is nothing but the counterfoil. Like that, they'll give some slips. So whatever it may be, the transaction that we come across will be done in the form of slips. That's why we can say that banks, they will follow the slip system of banking. And after the visiting hours of the customers, when they are going for their accounting works, okay, they'll take all the slips. Okay, and according to the slips, they will record them in their main books, cash book as well as main books. So thereby, the transactions will be completed. They'll think that their transactions are completed. So like that, they'll follow the slip system, okay, of bookkeeping or ledger postings. ledger postings or bookkeeping, whatever it may be. And one more thing is, here, after doing all the things, after ledger posting, all these things, they have to total the ledgers and they have to prepare the final accounts. Compulsory. Compulsory, they have to prepare the final accounts. And when they will prepare the final accounts? Okay, by 31st March of every year, they have to prepare this. Previously, they used to go for calendar year, that is January to December. But after some time, taking into account the financial year followed by income tax authorities, the banks also, they used to close their books by 31st March of every year. Okay, so they have to, why they have to prepare final accounts? In order to know the profit amount or loss amount, whatever they earned. Whatever they earn. Okay, sir, you are telling about profit loss, but this is not a survey, this is not a trading account, this is not a manufacturing account. Why do you have to take into account profit or loss? Yes, even though it is a service organization, as they recorded as a company in the act, we have to prepare the profit and loss account and balance sheet. Mind it, the procedure, the names may be different, but the procedure is one and the same as a service organization. Here in this case, okay, you must know what is the difference between profit and surplus. Profit is nothing but the additional amount that they got or whomever they got, and surplus is nothing but the leftover amount. Okay, leftover amount. So there is a slightest difference between the profit and surplus. But generally speaking, as they are recorded, as they are following the Banking Companies Regulation Act, they have to compulsory show the profit and loss account and balance sheet. Okay, when they are going for preparation of final accounts, whether any section will take care of that, yes. Section 29 of the Banking Companies Regulation Act of 1949, it will take the responsibility of preparation of final accounts of any bank. So you must always understand and you must always keep that in your mind that Section 29 only, it will take care of preparation of final accounts. And in Section 29 also, they will go for third schedule. They will take into account third schedule. And in that third schedule, they will prepare two forms, Form A and Form B. Form A gives you the financial position of a bank, and Form B will give you the profit and loss account of a bank. Okay. When you come across, when they want to see, first of all, they have to go for Form A and then they have to go for Form B. But when we are preparing when the bank people, when they are preparing, first of all, they have to prepare Form B only. Then after preparation of Form B, then only they will prepare Form A. So there is a lot of difference, please mind it. When they are showing the books, first of all, they will show Form A, that is financial position of a bank. Then Form B, that is profit and loss account of a bank. But when we are preparing, when they are preparing, they have to prepare Form B first and then Form A. Okay, Form B. Okay, what is this? I told you already that this is nothing but profit and loss account of a bank. Okay, so in what way? Previously, in olden days, they used to prepare in a horizontal manner. Okay, like how the ordinary accounts, okay, like how ordinary profit and loss account we are preparing. Okay, they used to prepare in the same horizontal manner. But after some time, and at present also, they are following the vertical method. Okay, so when you go for vertical method, some of the items which will occur, okay, 2 times, they will be eliminated. And unnecessary items also, they are removed. And what is essential, that only they have taken into account. In profit and loss account, when you are going for vertical manner, we will come across 4 heads, mind it. We'll come across 4 heads. First one is income. Second one is expenditure. Third one is profit or loss. And the last one is appropriations. Appropriations. In this 4 heads, they will prepare the profit and loss account. Okay, fine. So let us clarify our doubts regarding profit and loss account. That is Form B. Form B. Okay. Form of profit and loss account for the year ended 31st March. Okay. So when I told you that in 4 ways they will prepare. And another thing is, whatever it may be the transactions, whatever it may be the items that they want to show, they'll show in the form of schedules. They'll show that in the form of schedules. So all the items, yes, all the items, whatever they came across, they'll show that in the form of schedules. So why they have to show in schedules? Okay, in order to show the Form A and Form B in a precise manner, they'll prepare the schedules. They can show all the things one after the other. But thing is, in order to show the statements in a precise manner, they'll go for preparation of schedules. And when we go for, okay, Form B, how many schedules will come across? We'll come across 4 schedules. Okay, Schedule 13, Schedule 14, Schedule 15, and Schedule 16. These are the 4 schedules that we will come across when we go for Form B. Okay, now coming to balance sheet, that is financial statement of a bank. How many schedules we have to prepare? We have to prepare 1 to 12 schedules. 1 to 12 schedules. And in this 1 to 12 schedules, 1 to 5 schedules will show the liabilities, and 6 to 11 schedules will show about the assets. And what about the 12th schedule? 12th schedule will prepare, but we won't consider that, we won't take into account. Just for showing purpose only, we will prepare this 12th schedule. Okay. And that thing, it will appear at last. So like this, in order to show the statements in a precise manner, we have to go for the schedules. Okay. Now coming to 13th schedule. 13th schedule, it will give you the interest earned by the bank. The interest earned by the bank, it will give you. And what are the items that we come across? In schedule number 13, interest earned. Interest, discount on advances or bills. That is the first one. Income on investments. Interest on balances with RBI and other banks and others. These are the 4 items that we come across under schedule number 13. Now coming to schedule number 14, other income. Other income. Schedule number 14 is other income. In that, how many items that we will come across? We will come across 7 items. First one is commission, exchange and brokerage, profit on sale of investments, profit on revaluation of investments, profit on sale of land, buildings and other assets, profit on exchange transactions, income earned by way of dividends, etc. from subsidiaries and joint ventures, and other income, miscellaneous income. Other income means miscellaneous income. All these items, they will come in schedule number 14. Now, coming to schedule number 15, this is interest expended. So whatever it may be, the interest, expenditure that we come across, we have to show. And in this expenditure also, what is the interest that was expended? Okay. Previously in 13 schedule, interest earned by the bank. And here in 15, what is the interest that is going out? We have to take into account. Schedule number 50, interest expended. In that, interest on deposits, interest on RBI and interbank borrowings, and other expenditure. These are the three items that we come across when we go for schedule 15. That is, the name is interest expended. Okay, fine. After this, whatever it may be, the other expenditure, we have to show that in schedule 16. Schedule 16, that is operating expenses. When they are operating, some expenses they will come across. So all these expenses, whatever they are coming across, we will show under schedule 16, and the name of that is nothing but operating expenses. And what are the contents of that? The contents of that are payments to and provision for employees, rent, taxes and lighting, printing and stationery, advertisement and publicity, depreciation on bank's property, directors' fees, allowances and expenses, auditors' fees and expenses, law charges or legal charges, whatever it may be, you can take law charges or legal charges. In any way you can take. Postage, telegrams and telephones, etc. Repairs and maintenance, insurance, other expenditure. All these items we have to show in schedule number 16, that is operating expenses. After this, you have to prepare one more thing, and there is no schedule for this. That is provisions and contingencies. Provisions and contingencies. That is provision for tax, provision for provision for doubtful debts. Okay, all these provisions we have to take into account in this head, provisions and contingencies. So like this, you have to prepare 4 schedules for Form B. Okay, now with this, I'm going to stop, and tomorrow I'm going to take into account the Form A. Okay, until then, have a nice day.